Congratulations! You're on your way to becoming a savvy investor. Investing can seem complicated, but don't worry, we'll break it down. Today, we're talking about dividends. Dividends are like getting paid to own a piece of a company. They're a great way to grow your money. Let's dive in and learn more. Imagine you and your friends own a lemonade stand. You all work hard to make and sell lemonade. At the end of the day, you split the profits. That's what dividends are like. When you buy stock in a company, you become a part owner. If the company does well, it might share its profits with its shareholders. These profit shares are called dividends. Let's say you own 100 shares of Sunshine Lemonade stock. Owning shares in a company means you are a part owner of that company. When the company does well, it often shares its profits with its shareholders in the form of dividends. Sunshine had a great year and decides to pay a $1 dividend per share. This means that for every share you own, the company will pay you $1. Dividends are a way for companies to reward their shareholders for their investment and trust in the company. You would receive $100 in dividends. This is calculated by multiplying the number of shares you own by the dividend per share. So, 100 shares times $1 per share equals $100. That's $1 per share multiplied by your 100 shares. It's a straightforward calculation, but the impact can be significant, especially if you own a large number of shares or if the company pays a high dividend. Dividends are usually paid out quarterly. This means that instead of receiving one large payment at the end of the year, you receive smaller payments throughout the year. This can provide a steady stream of income, which can be particularly beneficial for retirees or those looking for regular income. That means you get paid 4 times a year. Each payment is a portion of the total annual dividend. For example, if the annual dividend is $4 per share, you would receive $1 per share each quarter. Companies announce their dividend payments in advance. This allows shareholders to plan their finances and know when to expect their dividend payments. The announcement includes the amount of the dividend, the record date, and the payment date. This announcement is called a dividend declaration. The record date is the date by which you must be a shareholder to receive the dividend. The payment date is the date on which the dividend will be paid to shareholders. Understanding these dates is crucial for investors who rely on dividend income. Dividends can be paid in various forms, including cash, additional shares of stock, or other property. Cash dividends are the most common and are typically deposited directly into your brokerage account or sent to you by check. Some investors choose to reinvest their dividends by purchasing more shares of the company. This can be a powerful way to grow your investment over time, as you are essentially using your dividends to buy more shares, which can then generate more dividends in the future. Reinvesting dividends can lead to compounding growth, where your investment grows at an accelerating rate. This is because you are earning dividends on both your original investment and the additional shares purchased with reinvested dividends. It's important to have a strategy for how you handle dividends. Some investors prefer to take the cash and use it for living expenses or other investments, while others prefer to reinvest their dividends to maximize long-term growth. Reviewing a company's dividend history can provide insights into its financial health and stability. Companies that consistently pay and increase their dividends are often seen as financially strong and reliable. Receiving dividends can be a rewarding experience, as it represents a tangible return on your investment. Whether you choose to spend or reinvest your dividends, they can play a significant role in your overall investment strategy. Remember, dividends are just one way to earn a return on your investment. The value of your shares can also increase if the company grows and becomes more profitable. By understanding how dividends work, you can make more informed investment decisions and potentially enhance your financial well-being. There are 2 main types of dividends: cash dividends and stock dividends. Cash dividends are paid in cash, just like our lemonade stand example. Stock dividends, however, are paid in additional shares of stock. Imagine Sunshine Lemonade paid a stock dividend instead. Instead of $100, you might receive 5 additional shares of stock. Both types of dividends have their pros and cons. Not all companies pay dividends. Some companies choose to reinvest all their profits back into the business. They might be trying to grow quickly or develop new products. Companies that do pay dividends are often more established. They have a history of profitability. Paying dividends can attract investors. It shows that the company is financially healthy and confident in its future. The sweet rewards of dividends. Dividends are payments made by a corporation to its shareholders, usually in the form of cash or additional shares. They are a way for companies to share their profits with investors. Dividends can be a great source of passive income. Imagine receiving a check in the mail or a notification on your phone, simply because you own a piece of a company. This is the beauty of dividends. You receive payments just for owning the stock. It's like getting a bonus for being a part of the company's journey. These payments can come quarterly, semi-annually, or annually, depending on the company's policy. You can use this income to cover expenses or reinvest it to buy more shares. For many, dividends provide a steady stream of income that can help with everyday expenses, like groceries, utilities, or even a night out. Reinvesting dividends is a powerful way to grow your wealth over time. When you reinvest your dividends, you buy more shares of the stock, which in turn can generate more dividends. This process is known as compounding. It's like a snowball effect. As you reinvest, your holdings grow larger and the dividends you receive increase. Over time, this can lead to exponential growth in your investment portfolio. The more shares you own, the more dividends you receive. This creates a virtuous cycle where your investment keeps growing and your income from dividends keeps increasing. And the more dividends you reinvest, the more shares you acquire. This strategy can significantly boost your wealth over the long term, making dividends a key component of a successful investment strategy. It's important to note that not all companies pay dividends. Typically, more established companies with stable earnings are the ones that distribute dividends. These companies are often referred to as blue-chip stocks. Blue-chip stocks are known for their reliability and steady performance. Investing in these companies can provide a sense of security, knowing that they have a history of paying dividends consistently. When evaluating dividend-paying stocks, investors often look at the dividend yield, which is the annual dividend payment divided by the stock's current price. A higher yield can indicate a more attractive investment, but it's also important to consider the company's overall financial health. Another key metric is the dividend payout ratio, which shows the percentage of earnings a company pays out as dividends. A lower payout ratio can suggest that the company has room to increase dividends in the future, while a higher ratio might indicate less flexibility. Diversification is also crucial. While dividend stocks can provide steady income, it's wise to balance your portfolio with growth stocks and other investments to manage risk and maximize returns. In conclusion, dividends offer sweet rewards for investors. They provide a source of passive income, the potential for compounding growth, and a way to share in the success of established companies. By carefully selecting dividend-paying stocks and reinvesting the earnings, you can build a robust and growing portfolio that supports your financial goals. Now, how do you find them? Section 7. Unearthing dividend treasures. Finding dividend-paying stocks is easier than you think. Websites like Yahoo Finance and Google Finance have screening tools. You can use these tools to filter for companies that pay dividends. Look for companies with a consistent history of dividend payments. This shows that they are committed to sharing profits with their shareholders. Don't just chase the highest dividend yield. Let's explore the key criteria for selecting top dividend-paying stocks. Dividend investing can generate passive income, but choosing wisely is essential. First, consider the company's dividend history. Consistent dividend payments over many years indicate financial health and stability. Companies with a long track record of paying dividends show they can generate steady cash flow and manage finances effectively. Next, check the dividend payout ratio. This metric shows how much of the company's earnings are paid as dividends. A high payout ratio might mean limited growth potential, while a low payout ratio suggests room for future dividend increases. Generally, a lower payout ratio is better, indicating the company can sustain and grow dividends even during tough times. A lower payout ratio also suggests the company is reinvesting earnings for future growth. Evaluate the company's overall financial health, including debt levels and cash flow. Finally, Diversify your dividend portfolio across different sectors to reduce risk and ensure a stable income stream. By selecting your dividend champions carefully, you can build a robust portfolio that offers reliable income and growth potential. Keep learning to grow your wealth. Investing in dividend-paying stocks can be a rewarding strategy. Remember to do your research and choose companies carefully. Look for businesses with a solid track record and a bright future. Keep learning about dividends and other investment strategies. Knowledge is power. The more you know, the better equipped you'll be to make informed investment decisions and grow your wealth wisely. Subscribe to Uncovered Wealth Wizards for free financial tips.